The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more into the breach do we go, dear friends. We're off 18 points on the S&P cash. We've had a couple of rally attempts off of 1872, which is the low of today. I suspect by probably the next couple of days, we're going to head back down toward our previous lows. I don't know if we're going to get there. We've got a lot of people playing with the controls of the market. My guess, though, is they have lost control of it, and we'll talk more about that. But it is, let me put it this way. There are companies that are starting to have their Lehman moment, and because they're not in this country, they're out of mind for a lot of traders that should be paying attention to them. We'll talk more about that today as we start the show off. A little over 3 billion shares on the New York Stock Exchange tape. So we have volume, and we have massive volume to the downside compared to the last 4 or 5 trading days. So we will continue to keep an eye on that. But I suspect that we could easily drift back down to the lows. A lot of the stocks that I'd been looking at, I'd been hoping that would bounce high enough that I could reshort them. No such luck. A lot of these things literally have not gotten out of their own way. We've had a handful of stocks that everybody piled into once again to get the indexes back higher. But that pretty much, this earnings cycle pretty much put the kibosh, that's a hyper technical trading word, on a great deal of what's going on in this market. But in the meantime, as always, we like to get started here at 2 o'clock for what I like to think is my best show on TFNN. Of course, it's my only show on TFNN. But we don't quibble and cloud the issue with things like facts. Anyway, let's get this party started. There we go. Oh, why am I not... I'm not hearing anything. I'm hearing nothing. A whole lot of nothing. Why could that be? Let's try this again. Okay. Something is broke, and I'm unsure what it is. Anyway, I'll just have to sing it today. It's all a lot of history repeating. Da-da-da-da-da-da. How could that happen? Good question out here. Where's my little microphone? Volume control, audio devices. Okay, I got my audio devices up here. And we go to line. Okay. Playback. MGU. Okay. Then we go to the setup and options and meters and talk and system. That's always a problem out here. Where's it at? There we go. It's just not like starting off the regular day unless I get this thing going.
Then it's all just a little bit of history repeating.
And the culprit, I'm sure, is the NVIDIA new video display driver that I installed, and it changed my audio card to the one on the video card. Rats. I'm going to have to get to them. Anyway, what else do we have going on? No, it was an NVIDIA problem. In fact, the funny thing is when I installed it, after I installed the NVIDIA driver, I didn't think anything about it last night. Then I started seeing all the stuff in the NVIDIA chat room about how it did that. So I probably should have gone and checked, but this is one application I have to play back the actual audio clips and everything else is pretty much the same. So not a big change out there. Anyway, we will get back into the swing of things. We're off 15 points, 3.1 billion shares of volume. There is no shortage of today, and I don't think there will be any. On this day in 1964, we become a global trading market by a direct ticker feed from the New York Stock Exchange to Switzerland. Gets its real-time link to follow share prices in New York, and a place where they can trade and arbitrage between the two. Of course, it takes about a second and a half for the signal to get there, and about a second and a half to get back. So they were at a 3-second delay issue already back then. And of course, I think if you go fiber optic, you can get it down to like 1 second now. So it's not that bad, maybe 3/4 of a second or something, but there's still a delay for not being anywhere close to the New York Stock Exchange. I always read the trials and tribulations of Jesse Livermore in his book, and he talked a great deal about just being down in Miami was way too far, and then he had an office that was a couple of blocks from the New York Stock Exchange, and that was too far. Suddenly he got a place right across the street from him, and when things got active, he would literally walk over to the exchange. They'd all sit up on the rail. They all called themselves railbirds back then, probably from the days of horse racing. But the railbirds would all sit up there, and all these guys that were literally fighting and trying to take money from each other as the robber barons would talk to each other and have cups of tea as the carnage went in on the floor down below them. They had hand signals to tell everybody what to do to buy and sell stuff. But on this day in 1964, actually get to the first part where the United States becomes that global haven, and we get real-time exchange prices between various countries across the pond. Not a whole lot to actually talk about in the market other than the fact that yesterday I did say that I covered my long position and went short. One of the reasons why is I started looking at the just incredible carnage going on in Europe in the Euro banks. And so that made me flip yesterday. I knew there was something wrong. I didn't exactly know what was wrong, but you don't get that kind of action across an entire sector of the European banking system without something else going on. I didn't really see a lot of it. I tuned in and looked. By late afternoon after the show, by about 3:30, I started getting the answer. That answer is that there are a bunch of these banks in Europe that are about to get their Lehman moment. And that's not a good thing if you don't know what Lehman Brothers was. And that is possible runs on the bank and also being maybe bankrupt. We will wait for more, but we continue to see a lot of these banks in Spain, especially in Italy, that look like they could go bankrupt at a drop of a hat. Some of the people that are better at this than I am were out speaking last night. Raoul Paul was one of those, Paul, P-A-O. He explained it a little bit better on CNBC last night, but then I got into some of the other stuff that he'd been writing, and now I kind of understand what is going on, and I couldn't go long, with your money. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I had a question in the den, and where does that history repeating thing come from? And that is a thing from about 1998 between Shirley Bassey, who sang the Bond song back in the 60s, and a group called the Pilots. Oh, no, excuse me. I said the Pilots. The Propeller Heads. I don't know what that is. No, it's some ad. I was going to actually get a link and put it in the den. Steve Rhodes was asking. Anyway, what else do we have out here? It says I can skip this ad in 4 seconds, but I have to play it for 4 seconds. No good. No good at all. Anyway, we were talking about the banks in Europe, and I started going through a lot of this, starting about as soon as I got off the show. There was a lot of things. I knew something was up. I didn't quite know what it was, so I got rid of my long and added a short. But it is problematic. Anyway, I started going through a great deal of these, saw Raoul Paul, P-A-O, talk about it last night also. So I spent a little bit more time in it, and yeah, there is some huge problems, and I mean Lehman-sized problems, and I think we're probably looking at the equivalent of Italy doing a Greece this summer, so maybe a Greece fire in Italy. Certainly looks like most of those banks have far exceeded what they should have lent. And of course, a lot of that was encouraged by morons in the EU. We have the same kind of morons out here. They just continue to, if that doesn't work, just double it, just triple it. Let's just throw it. You know what? We're all in. This may not work. It may work. We've got no ideas whatsoever. So we're down today with the last vestige that we have, at least in the United States, for monetary reaction and policy, and that is attacking the dollar. We're off almost $2 on the dollar index today, and it's been a non-stop onslaught from the Treasury and selling into the Forex market. And I think this is the kind of the end where cooperation between the countries and it's all for yourself has started. The market started to slip here. They started to spend more, push more dollars out in the Forex markets and really crack this thing wide open. I don't think that there's much more to it other than that, and that is that the last policy tool that we have is pretty much trying to push the dollar index down. Of course, that popped gold today. Congratulations to all those people that had gold positions. But the question is just how long will this last before the Europeans do one more thing? Of course, when you wonder why all the European banks are having such incredible problems, it goes to the way that the Europeans decided to handle it, and that is the negative interest rates. Negative interest rates, at least from some of these CEOs over there, say that there is no way that they can actually make money. And of course, almost all of this is done to save the banks. So now when they've gone to negative interest rates, it means that the banks that they were there to save probably are going to kill them if they continue doing it. I think probably a little bit more of this is the realization over the last 2 days this is true, and the Europeans are kind of getting off that, which is making their currency stronger, and of course the dollar weaker at the same time. So we've got kind of a 1-2 punch out here. The realization that no matter how big Mr. Draghi said his bazooka was, it is limited. And of course, you get the unintended consequences of playing with Mother Nature or finance. One of the oldest sayings that's been around Wall Street is that finance does not lend itself to innovation. And of course, everybody is always interested in seeing how much they can game the system. But I think today is one of the days when that has broken. They can no longer probably enforce any more or higher negative interest rates in Europe. And of course, we also have the problem with Greece now in Italy and maybe spreading to other countries. A great deal of these banks, from what I read now and read last night, do have a solvency problem. And my guess is the cash from the EU is going to have to go to buoy up those banks. They will not be able to throw it away and around in the way that they've used to. So we have got a fairly significant sea change in this market. And maybe the best thing is that we now know negative interest rates will not work without killing the banks. It is chemotherapy, but chemotherapy that seems to quickly kill its patient. So anyway, we're off 6 points on the S&P cash here today. We're closing in on 3.3 billion shares. So we'll have to continue to see how this happens. Now we know why the bond spikes. It's getting nasty. And of course, everybody's going to want to buy this because, of course, the lower dollar will help a little bit out here. But I think that we continue to see problems down the line. Even if we get a little bounce out of here today, I think it will be rather short-lived. And of course, lower dollar helps crude. So a lot of these things are going to temporarily move the market. I'm hoping for more bounces. I think we've gotten to the point now where every bounce is something that probably should be shorted in the market. We just cracked 1900 on the S&P cash. So let's start getting into some of the stocks of interest out here. In fact, let's get to those and the ones that are moving. Let me find these movers out here. And what do we have? Amazon. I was looking for Amazon possibly to close back in its trading range. We talked about confluence ranges, mostly to the upside where we'd want to short. One of the things that actually happened in Amazon is this long-term range that has been pierced today. We talked about it last week. It does. You've got about 1 day before this thing needs to close back above, what about 538, 539? And right now we're trading out at 531, 532. So a close back in here would finally say that at least on a temporary basis, you do have a interim low in Amazon. The volume would tell you don't. We've got 7.5 million shares already against a 7.9 million share day on January 12th. So nothing's gotten any better. We may just have a lot of people that want to throw money at the market today, 1903, but my guess is that we're now going to see maybe 1920 where everybody starts getting short again, starts selling into this market. Then it'll be 1900, then it'll be 1880. I think we're headed lower. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Some of these stocks out here that had at least some support levels that we're setting up. Doesn't look like you're going to get those. Buffalo Wild Wings. We've talked a great deal about this stock, mostly because I go there a lot. I disliked that they had continually been upping their menu prices for about a year. I only go there on Tuesday and Thursday when the wings are half prices. because I'm cheap. But this thing had a nice gap that started a lot of it on October 28th, 2014. It's been kind of bouncing off this level for a while, as high as 205.83 back on September 23rd. It's down 138.31 today, 2 million shares, and that's against that big gap up, of course, that had 2.7 million shares. So we're going to get back into that with plenty of volume. One of the problems that you'd have being long this thing, of course, is the huge volume down day of the 29th of October where this thing blew up on earnings. We've got our next round of earnings, same kind of thing. It's just, any of these medium-priced restaurants, to me, look a lot more weak than a great deal of the other ones. Somebody was asking about shorting McDonald's. And I said, I just can't see shorting McDonald's, although, of course, it was down today. But still hadn't broken its trend, anything else. We would have to have one whale of a move up in this market to really get anything going. And as far as I know, I just think every bounce is a sell now. Anyway, what else do we have going on out here? Lexion Pharmaceuticals out with earnings, ALXN. We'll check in with them. XN, isn't it? It is. You can call me at 877-927-6648, by the way. This thing's had a big gap that's acted as support several times, as many of the stocks have done so out here. This actually had a big gap on the 30th of January 2014 with 5.8 million shares. We've got pretty much 3.7 million shares already. By the end of the day, that's going to be too much. It opened at 130, a little less than 130. Let's call it 131. Got down to 130.51s. Kind of tried to do a retracement. A great deal of volume, which is not something you want to see. On my Power Law Vector Indicator, it's like the general market out here, and that is the move from September 28th to December 31st. I had a lot less energy than the move down, which was quite brisk. So we'll continue to keep an eye on that. What else do we have? I got a couple of things going on here, so just hang on. Okay. I'm waiting for one stock to bounce out here. I think when it bounces, I'll be shorting it. Anyway, you can call me at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can put a message in the den. What else do we have? Got to get to some of these other stocks that are already in progress. We did Alexion. We did Buffalo Wild Wings, Chipotle, CMG. And they got more people looking into what's going on. Never a good thing. And, of course, you may not have wanted to put that food with integrity as your motto when everybody's grasping the porcelain throne because they ate your food. No one could figure out where it all happened. I've heard a lot of conspiracy theories, but not a big move off this 399.14 low from January 12th. You pretty much had your pop to 484.20. Of course, earnings down here today. Could you continue to move back up? I think you could. There's a gap right there at 520. I think your risk reward would have to be somewhere around there to make it worth it, and that is the problem. A lot of these stocks in no man's land, you either need to have them test the lows or test a high so that you can short it. Too many of these things with cross currents in it. Energizer Holdings, a nice pop on earnings. This thing gapped down in the last earnings cycle on the 12th of November with 3.3 million shares. We're up on 1.6 million shares. 39 and a half might not be a bad spot for it to take a look at the re-short on it, because that's the way these things set up. FEIC, another one out with earnings today. Open lowers, trying to go higher. Volume's not all that exciting. Back into a high volume low of October 28th with 1.1 million. Did not touch that low. Still needs another $1.28. Let's call it a $1.35 to get back down to the October 28th low. It did not get into that low. Volume is not all that exciting on the way back up here. Let's look and see what these guys do. I kind of vaguely remember, but sometimes I get it wrong. So always like to measure twice and cut once. Scientific instruments, and services for nanoscale operations. So we have that, and some nice volume down up in this candle, but gave really ran a lot of shorts up to almost $74 today, and probably not a bad short. About that $75 line if you could get back into it. So we'll take a look at that. General Motors is off 3%. Let's take a quick look at that. I don't think that there's a whole lot to saying that what I had been saying for the last year, which is that these auto companies had done everything to push out 7- and 8-year loans. That tells you everything you need to know about the real demand for automobiles out there. And of course, down on fairly strong volume back to this gap up that was on August 27th that had 28.5 million shares. We had 21 million shares so far today. I think we could see pretty close to that 28 million shares. I think you want to get back in and test these lows from August 24th. That's $24.62. I don't see anything that changes the trajectory of this stock anytime soon from their earnings this morning. Another stock off, one of the high flyers in the DNA space, Illumina. Earnings weren't any better for them. They got up to 242.39 on July 20th, trading out to a low of 140.12 today. Same thing on it. It's got its low of October 6th out here at 130 on 17 million shares. Just 2.6 million shares here today. But you've got to go back and test that 130 before you find any low. So we've got another, $10.12 to just get back into that area of about 130 to 122 has been a fairly decent level of support over history. And of course, you've got this gap that actually started on the 17th of January 2014 and the 16th of January 14. The one on the 17th happened with 7.2 million shares. So, you need to get back into that 130 lane, I think, at all. Now, does it do a ABC before it gets back down there? It could. But, what do you know? We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And anyway, we were looking at aluminum when we left. We'll come back here and take a look at other things. Just check in with the, and we're up 3 points on the S&P cash now, 3.5 billion shares, so a good volume day. Yeah, nothing like a little scare to get everybody started. Of course, I would imagine we're going to see a lot of central bank work out here, but my guess is that every one of these bounces is meant to be sold now and or shorted. I had an email on the question whether or not I was shorting the indexes, and the answer is no. I'm shorting individual stocks. Question from email.
I got mail. Yay! I got mail. Yay!
I got mail. Anyway, what do you think of GoPro's massive short? Can you take advantage of this, or do they know something is very bad and they will cover in the low single digits? Thanks. Pete from SJ, California. San Jose, I imagine. Anyway, at least he's not from Lutz. When we look at GoPro, as we said, this thing probably is not going to bounce unless they get a new CEO, and I don't see any chance of that. Everything that they're doing is now turning to mud. The question is, does this thing get any kind of bounce with its huge short interest? And yeah, you can get a $5 move in this anytime you want. The problem is going to be that everybody knows that this is a commodity company that makes hardware, and the competition's just going to get worse. All the things that they said that they were going to do never worked out. The new drone business doesn't look like it's going to be anything. You know, everybody knew this when the stock went public. Everybody knew it when they were paying an extra $20 to borrow the shares when this thing was $90. My guess is those same folks that were short at 90 are probably still short. You're not going to be able to run them out on a $5 move. I don't believe that there's any way that you can get shares to short. My guess is this is something that's 90% not insider, but street shorted. And it's not like you got a bunch of Johnny come latelys that are shorting this thing saying it's going to go to zero. This is the street. They'll be out there beating the drum soon enough. If you want to know when this thing's going to get a low, wait until everybody comes out in a week and tells everybody that this thing's going bankrupt and gets all the longs out of this that they can possibly shake. And at that point, you're probably going to see the big men of the street that have been short this thing, you know, since that $96 range. They were actually short, but it had to break $76 or $78 just for them to break even. So they knew this thing was a dog. They knew that the CEO had a dad that was in the industry, knew exactly how to play everything. There was no way that anybody could actually get short this thing. So I don't know what else you can say other than that. Wait until everybody in the street comes out and says it's going bankrupt, and then watch the street cover as they put as much heat on everybody that's still in the stock as they can, and that would be it. Thanks, Pete. So yeah, it's going to be one of those things where you know it when you see it. You'll see the bear rate on this thing, and the bear rate will be when they want to cover it. We're at 1912 on the S&P cash, up 10 points, 3.5 billion shares. So what else do we have out moving out here today? Let's take a quick look at it. Claro, we did CMG, Energizer Holdings, FEI, Lumina, International Paper, didn't move much. Merck, Myred Genetics, MYGN. This thing spiked pretty heavily down. It's gotten some of that back. It's got a huge gap, actually a double gap, that goes back to August 26th and August 25th. Both of those, neither one of them had that much volume, but you have a huge volume day down here, kind of what this thing ran into, which is the June 26th, June 26th, 2015 day, where it had 7.9 million shares, got into it with 1.8, kind of reversed out here. My guess, though, is this thing's going to continue to drift back down into that 32, 33 level movement out here. What else do we have? Claro. This one's actually up, but it's a less expensive stock. OCLR. OCLR. Oh, Claro. Now, this one actually broke out of a longer pattern that goes back to April 23rd of 2014, when this thing got taken apart, went from 357 Magnum. You feel lucky, punk. I wouldn't have, because on that day, it quickly in the next few days went to $1.44, bounced around here. Now you can see how consolidations are done. 8.5 million shares the first time it went to May 7th. Next time it gets into $1.31 with 440,000 shares. Next time $1.40 with 370,000 shares. Finally has been making kind of a big ABC up into this move here today. What else do we have out here? I don't see a lot. I mean, it's a legitimate breakout with volume for Claro. Radware, RW, was it RD? WR? WR. Radware, off 11%. This one's breaking its previous lows. Software maker down on heavier volume. Needed, 8.5 million shares. Still lower than that October 6th low at 1260. But not a lot of volume out here. Unfortunately, a lot of these stocks just continue moving down. The downside to this one, of course, is that the energy to the downside was much more than the energy to the upside. That October 6th low to the November 3rd high had a little juice, but man, you had a lot more back on the way down. This high volume low you needed to get tested, and now it's blown it out, but without the volume. So you'd need to close back above 1260 to get this thing in the trading range and care. Tidewater, TDW. Out here, Tidewater, what can we say? This thing kind of broke below the previous lows, done it on my monster volume, so you got to hate that. The January 20th low at $4.50 had 1.3 million shares. We got 3.3 million shares already. The cardinal rule is high volume lows are not a low. They're only going to get retested. What you wanted to see is this thing come in with about 500,000 shares. All you have is a bounce in a downtrend. Does it look all that horrible? The answer is no. But unless they can continue beating the dollar to death, I don't know if there's a whole lot of hope for this thing to do anything more than consolidate for the rest of the year. Let's see, oh boy, Chop Fest. That's it. Chop Fest 2016. Sunday. What else do we have? Okay. Yeah, we're up 8 points on the S&P cash. So we're going to have a lot of this war going back and forth. Let's check back in with Amazon, because that seemed to be a issue. Is this thing going to get back up? No, it's not going to make that 540. So it's broke its confluence level. At least it doesn't look like it's going to break, come back over it. Look for the close above 540. If not, you got problems. We'll be back in a moment.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Like I picked the wrong week to quit drinking.
I think you did. We're now just up 5 points on the S&P cash. 3.6 billion shares. It looks like the volume's kind of tailed off in the last 30 minutes. We'll have to really see what comes in the last 30 minutes of the day and see whether or not anybody's willing to buy this with the dollar down $1.80 or $1.58, excuse me, on the cash, and just see what happens out here. I suspect, as many people said in the den, it's a chop fest 2016. Just be very careful about which side you get on. My personal thought is that I will not be shorting the indexes right now, but I think there are a lot of stocks out here that people are wanting to get out of. Every dime up is one that they want to sell. So we'll continue to keep an eye on it. I think we had our best opportunity to go higher. Could we get back up to 1950 on the S&P cash? I think we could. But I'd be shorting all the way, and will be shorting all the way. It looks like there's probably going to be too much going on. I'd hate to be open when the Chinese and the Japanese open tonight, because that could be absolutely brutal when those countries start thinking about, that dollar came down. Ooh, they kind of like that strong dollar. A weak dollar, man, what can happen? Anyway, we'll continue to watch this through the end of the show. But great deal going on out here. Now, we've got a lot happening again after the bell and into the morning. So there's going to be no shortage of things driving this market back and forth. I would say I would feel a little bit better of thinking of higher prices if we'd seen something like the IBB actually catch a bid and start moving up. It got to a low of 151.63. It's still just up a buck at 262. I don't see a lot of people jumping on that grenade. I wouldn't if I were you, but if you were really thinking that maybe some kind of bottom was in, you might even see this thing up 10 bucks right now, that it's literally flat on the day. Might mean that the thing's found a bottom. Doesn't mean that anybody's buying it and it's going up. We do see some movement in some of these, of course, commodities. Everybody's going to be all over it with the dollar moving. Southern Copper coming off its earnings misstep yesterday, up a bit today. But again, this is kind of what I've seen in the rest of the market, and that is that it bounces higher even in these commodities other than gold, still kind of look rather peakish, at least Southern Copper. It is higher today. It's higher on a lot less volume than yesterday. We had 1.5 million shares yesterday, just a little over 700,000 now. And, you might be looking at this thing getting back up to the January 29th high, $25.93. But, man, not a lot of juice in that one. Other stocks of interest to me, Tesla's taken a beating. It hasn't recovered that much today. TSLA, we made some good money on this, but probably should have stayed on it a little longer. It has broken its previous low, but again, the volume has not come back in. The August 24th low, 195, had 9.5 million shares in it yesterday, 5.7 million shares today. More volume, and that is 6.4 million shares already. Nowhere close to that 0.5, but it would have to close back above 195 and continue this low volume. A lot of weak sisters out there. In the meantime, sell when you can, not when you have to. Cover when you can, not when you have to. And we'll see you tomorrow. Same bat channel, same bat time. Hang on for the one and only Tom O'Brien and his golden, what would you call it, a podcast? For the next 2 hours. We'll be back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.